Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 19th of September 2025. The first chart is the US dollar index futures. They closed a little higher this week. We had the US Fed announce a reduction in the cash rate target this week, and the expectation was for the US dollar index futures to fall on that announcement. And instead they've shaken out. Now, it might be a shakeout that's short-lived, and the market will respond lower as time goes on. Just goes to show you can't anticipate what the market's going to do under normal expectations. You just have to follow the chart itself. And this week, the market's shaken out. It's come down. It tagged this important level here and recovered almost immediately and closed as an up bar for the week. After all of these bars suggested weakness was coming in, but there was no catalyst to move the market lower. And in response to the inferred strength seen in this market, many of the associated markets are all showing weakness or struggling a little, which you'll see especially the currencies. This is the E-mini S&P 500 index futures. And they closed high this week, albeit with a narrowing spread. So the thrust higher has shortened to some extent up here. The market is starting to move in a grinding fashion higher. There was a little test for supply below the previous bar's close prior to the market moving higher this week, and volume did increase to a little above the average. That probably is due to the increased activity around the cash rate target announcement, which came in about midweek. There's always a little more activity during that period. But the market has closed clearly above the previous bar's high. So this market is still looking quite positive at this stage. This is the US Treasury 10-year note futures, which continue to trade within the range of this widespread down bar. They have been doing so for some time, and I'm waiting for the market to really break out of this range before it shows us some real intent. The market moved higher 2 weeks ago and moved into consolidation mode the next week. This week there was a brief attempt to move higher before the market did move lower, but trading remains within this up bar's range. So there's no huge amount of damage being done at this point in time. You may see price come back and test this level here, which is an intermediate breakout line, intermediate being inside the overall range. And it might come down and test that line for strength. We'll see. That would be the expectation at this point. Copper price futures. Copper price futures continue to trade in consolidation and absorption mode following this widespread down bar. The market's effectively trading in this range here, adjacent to this line where previous support came in the background. There's no great indication the market's going to push higher. You can see volumes remain below the average, and they're even reducing slightly over time. But this market's not looking particularly weak. It's just showing no great intent to move higher. And to some extent, it's just getting itself away from the inferred weakness from this widespread down bar. Gold price futures. Gold price futures did close higher this week. There was a little bit of volatility this week with the trading either side of the previous bar's close. We saw a test for supply in here. The market did attempt to move higher, but a little bit of weakness was inferred in the highs of the bar, and we had pretty much a mid-bar close within the range of the previous bar. Volume remained slightly above average. This is genuine trading. Now, you might get an early test for supply in response to that bar. It does appear that some supply was drawn out, So you may see some trading like this early in the week, next week, and then a response depending on how much supply is drawn out. If supply continues to be drawn out, I would expect a little bit deeper pullback. And if supply is found to be low, the market may then start to edge higher again in response. Silver price futures. Silver price futures came back through the range of the previous bar this week, effectively testing for supply, but it was like an elongated test for supply, like this, a little deeper than you might think would be ideal, where the market has come back through the range of that bar, absorbed any supply that was drawn out as the market pulled back, then recovered to close back up as a slight up bar for the week. It did close within the range of the previous bar, so that's really an elongated test for supply. It looks a bit awkward, but that was the intent behind it. Now, in response, you'll either get a little narrow spread secondary test for supply, like this, especially earlier in the week, or you'll see an up bar in response. If supply was strong and that forced the price lower, that would be a failed test, and that would be a negative for the market. But at this point, it looks like the market came back, absorbed supply, recovered the lost ground, and closed just as a slight up bar, and that suggests an underlying strength in the market. This is light crude price futures. This market continues to trade roughly sideways within this range. We've noted it for a while now. There's no great intent being shown. When the market threatens to move lower, we see some demand come in. And when the market pushes a little higher, we see supply coming in. This is the sweet spot at the moment. Prices trading sideways. We saw this threatening down bar 3 weeks ago. Then there was a absorption type bar in response, and that's effectively what we've had this week. A little push higher earlier in the week, and then a fade lower later in the week. So the market's pretty much traded sideways this week, and it's not showing any great intent at this point in time. Into the currencies now. This is the Euro-US dollar currency pair. This market attempted to move higher earlier in the week. There really should be another line across there at this point. In response to all of this absorption type trading here, testing for supply, absorption, consolidation, the market attempted to move higher this week, but when the US dollar recovered to close as an up bar this week and effectively produce a shakeout type bar, this market then faded lower and closed poorly. Now, I just say faded lower because even with all the increased activity this week, the volume was slightly below the average. So there was no great intent being shown, at least in this market. The market's just drifted lower as the US dollar has recovered the lost ground. In response, you would generally see an early test for supply. This sort of bar, at least earlier in the week, would be the expectation. If increased supply is drawn out, you'll probably see this move a little deeper. And if supply is found to be low, then I expect the market will trade pretty much sideways in here, or maybe even attempt to move a little higher. This is the British pound currency futures. You can see that it's acted a little weaker than the euro itself, closing below the important level here. Volume in this market was also reduced and slightly below the average. So similar to the euro, this market's moved higher earlier in the week and then faded lower as the US dollar recovered the lost ground and closed as a slight up bar. And similar to the euro, a test for supply earlier in the week is the most likely outcome, and then a response depending on how much supply is drawn out. Japanese yen currency futures. Similar to the previous two charts, this market attempted to move higher earlier in the week and then faded lower on reduced and just slightly below average volume to close right at the previous support line. All these markets haven't shown a great deal of intent in either direction. They've really just faded lower on average or slightly below average volumes and effectively traded sideways overall. Same goes with this market. Little test for supply is the most likely response early in the week, and then we'll see how much supply is drawn out, and you'll see how the market reacts to that supply. Aussie dollar currency futures, and they did a similar thing, although perhaps slightly more strongly as the markets closed comfortably within the previous up bars range. Those other markets didn't have an up bar like that in the background. This market did attempt to move higher and then faded lower, once again on reduced and just slightly below average volume. So that wasn't actually a bad response, really. And similarly, you would expect a narrow spread test-like bar in response, and then depending on how much supply is drawn out, you'll see what the reaction is. Bitcoin futures. Bitcoin futures traded in consolidation mode pretty much for the whole week this week. I kept on waiting for a further response after it was established that this market was consolidating. But there was a little bit of supply being drawn out. You can see that volumes increased and it's almost up to the average. The fact that the spread remained quite narrow shows that the market was really making a decent attempt at absorbing that supply, or that's buying the supply, and that left the trading right up high in that up bars range. And that's generally a sign of underlying strength to the market. I would expect early in the week next week, a little narrow spread down bar like this, just to confirm whether supply has begun to ease and whether there is further supply in the market. I only say that because volume was slightly increased this week. Would have liked to have seen that a little lower to show that selling pressure was low in this market. But some supply was being drawn out, and the narrow spread shows that the market was attempting to absorb that supply. So a little test for supply early in the week, and then a response depending on how much supply is actually drawn out. If supply continues to be drawn out, a pullback to this level is probably likely to test that for strength. And if there is very little supply in the market in the first day or so, then a push up to this level becomes a possibility. And just back to the US dollar index futures quickly now. We saw the market pull back and recover this week, testing this important line for strength. This is effectively a little shakeout, and generally in response to a shakeout, you'll see a secondary test for supply and then an attempt to move higher, if that's successful and volume is found to be low, or you'll find an immediate push higher. Apart from that, if this is actually a fake out and not actually a genuine shakeout, you'll see the market move lower in response, and you'll get a bar that looks more like this. And that would actually be a genuine response, an expected response to the cash rate target that was announced this week. So just watch to see if this is actually a fake out. If it is, you'll see a bar that comes back and probably ends up back at this level. That's an awkward looking bar and probably infers the market's going to move lower. And then watch for the response. Okay, thanks for your time. Now next week, I may be interstate, so whether I get this done or not will be interesting. I'll have a go if I get the time and perhaps put something together in a smaller form fashion than normal. And back the following week after that. Thank you. See ya.